Hi everyone, it is Monday afternoon, the 26th of July, and this is the Share Show with Jeff Fitzpatrick. This week we've got a really special edition, starting with Owen's market assessment. Then we're going to look at the research that I do each week into potential trades. It's very special because I don't normally share this. This is really top secret trade stuff, but I hope you'll be impressed that there is a lot of work goes into finding the trades. And then we've got the normal updates on our live events and partnership. So let's get straight into it and hear what Owen O'Malley has to say about the market trends as they finished last week.
Of July 2021. You are very welcome. So as we said last week that we had a bit of a pullback on Monday. This is the S&P 500 and that was the end of the pullback, the typical follow through on the fourth Monday. And now we've had a period of growth. So the S&P 500 has had 4 great days. Our next resistance here for the S&P 500 potentially is around about here. And then after that, the next support is around about here. So that's the S&P 500. We'll take a look at the NASDAQ next, the top 100 technology companies. And we're taking a look at here the fact that it has recovered and it's could hit a bit of resistance here and pull back a bit. If not, there's potential to pull back up to the previous resistance level. So NASDAQ is pretty much at a crossroads now. We'll see what it does. We'll get a good idea we'll have a clear idea certainly by bottom fishing on Wednesday, whether it's on the way back down to support here or climbing back into the other resistance level. The Dow, we'll take a look at the Dow. Again, the Dow has had 4 good days of growth. And again, if we look at it, there is the potential to get back up to here. And however, it could bounce back down to here again. So that's the Dow. We'll know clearly next week if it can manage to pull to higher levels. And then lastly, when we take a look at the overall market, we take a look at the VIX. And the VIX is obviously coming back down to support, which is the new support for the VIX over the last, say, 4 months is 15, and resistance is around about 25. So that's where we're at the VIX. The market goes up a little bit more, we'd expect the VIX to come down. And then likewise, if the market comes down, the VIX will track back up again.
Fantastic. Thank you very much, Owen. So let's now have a look at the research that takes place behind the scenes each week. So here we have 25 potential trades. Of course, some of the clubs will be in many of these, and they'll be in different ones too. So they're not all available to each of the clubs in partnership. I can also tell you that this list of potential trades is ranked. So the top one is better than the bottom one in terms of the potential return that it's got. If you go across to the far right, we've got not put and put. So I'm talking about put trades. And the return on investment, ROI, is what we would get in percentage terms if we didn't have the shares put to us. And the return on capital employed is the return if the shares are put to us. So what do we want? Do we normally want the shares to be put to us or not? My view is we don't. I would rather just keep the premium, have the stock buying power returned to us, and then get on with the next trade. So going across this page, let's have a look. The first thing we do is look at the actual charts themselves. So here is the chart. We'll come back to this a few times during the course of the presentation. And this is Exelixis, ticker symbol EXEL. I'll come back to what the blue arrows mean shortly. But what we're looking at the moment is the fact that the share price is very low. $17, in fact, as we look at this. But this is after the market has opened on Monday the 26th. The chart that we just looked at was actually produced from Friday's figures. But what we can also see is a gap. And we know that on 80% of occasions, those gaps will be filled. So in fact, I would expect in the fullness of time, this share price to get to back up there, $25 or $26. But we're not going to do that. We're going to look at selling a put at $23 if the figures work out properly, and putting a lid trade, a protective buy put, underneath it at $22. If we glance down to the bottom part of this, we can see that the MACD and the other indicators are all nicely heading in the right direction. So the share has taken quite a fall, quite a knock, but it's found support and it's turning around. So back to the chart. And we're looking at the second line of this one, XL. And as I said, the price actually on Friday was $16.65, so it's already gone up. The forecast, we think it will get to 26. That's an increase of 56%. Value line, see it getting to 28 in the next 18 months. That's the midpoint of their estimates, and up to 40 in the next 3 to 5 years. And again, that's the midpoint of their estimates. In the risk to reward ratio, we're looking at the potential for the stock to go up as against the potential for the stock to go down. And in this case, it's 0.33. So looking at the chart, we can see there is far more potential for this stock to rise than there is for it to fall. Certainly to fall to previous levels of support. You got to go back some time to find those. Next, we've got the strike price. So we've got to choose a strike price to trade. And you remember in this case, we've gone for $23 because that's the top of that gap. And we checked, and yes, we can put a $22 lid trade, a put buy limit order underneath it. And the premium is good. There's actually, when I checked the figures before the market opened today, it won't be very different, $13.15 available as a premium on this. That's huge. So in other words, if we were to buy this share for $23, we'd have had $13 up front. We'd be exposed at $10 on it. Given the current price of XL is $16.88, we'd be doing very well indeed if we can get that $13. Next, we get the SBP, and that's the stock buying power. That's how much of our capital we'll have to use in order to sell this put and to hold it. It's going to take away some of our buying power. But that's not a huge amount. It is actually also, I should say, $1,640 per contract. So if this is not put to us, we'll be on 57%. If it is put to us, we'll be on 80%. So that can't be bad. So we've done that for all of these stocks. And when I got down to the bottom one, CTSH, I was looking at ROIs of 15% and return on capital employed of 34%. So by that point, given the amount of time that's needed, and we're looking at months as far as January on some of them, that's not a huge amount in terms of what we normally make. So there it is. That's what we've got. We've got a list of 25 potential trades. Generally, they're all good, but some are better than others. And we'll update that as the week goes on, and as buying power becomes available, we'll make some of those trades. So that's what's going on. Now, I did say I'd talk about these arrows. So these arrows are helping me and helping us to decide which months to sell the puts for. And what I'm looking at is how long the stock price took to increase from the bottom there, support, up to a good level of resistance. And I'm looking at that angle of the arrows, the diagonal arrows pointing up, and I'm looking at where they start and where they finish. So on the first run, it started in December and ended in sort of mid-February. So it's about 2.5, 3 months. On the second one, it started in March and ended sometime about the middle of May. So you've got all of March, April, half of May, again, 2.5 months. So that's telling me that when this stock starts to rise again, we should give it probably 3 months at least to get to the strike price that we're interested in selling. And that's how we choose our strike prices and the expiration months. And next, a quick note about partnerships. Our quest to bring in partners is really taking off. We've got at least 10 people seriously interested in becoming partners with us. If you may be interested, have a look at the smartinvestors.ai website. There are now 3 pages on there on becoming and being a partner with us. A lot of information, including information in a table form you can complete about potential earnings. And next we got an update on our live event. So this is now confirmed. We're definitely going forward. It will definitely be on the 24th and 25th of September. We haven't got the venue confirmed yet, but it's highly likely that it will be the Hilton Hotel at East Midlands Airport. We should get that confirmed this week. On the Friday afternoon, we'll be looking at the statements, dashboards, value line reports, and a lot more. Friday evening is about socializing and really is a good chance for us to meet some of you and also hopefully to have a beer or two. Then on Saturday, it's serious stuff. So Saturday is some quite advanced training on puts. By the time you finish that training, you will be ready to become a member of the trading team of your club or partnership. It's like learning to drive. First of all, you pass your test. That's the equivalent of doing this course. And then you get on the road. You start trading with us in partnership. And that's where you really learn the ropes of trading. So if you can possibly make it, book in. Even if you can't, though, please complete the survey so we can get a good handle on numbers. I don't want to take a booking on that's not big enough and have to disappoint people. So that's it for this week. Thanks again. See you soon.